Hello everyone and welcome to RJ Sanderson TV, another big show coming up. Roy Sanderson, as always, is along for the ride. And Roy, it has been another turbulent month since last we met.
Dave, it's been extraordinary, the things that have gone on over the last month. Quite surprising. The
grand final over there in WA, which was disappointing, but perhaps some glimmer of hope as we move towards the introduction of more liberties through the national roadmap, and we're going to talk about vaccines in a minute. What's the general sort of mood amongst your clients at the moment?
They're quite happy to be heading out of lockdown. So there's a bit of a buoyancy over the last couple of days when it was announced.
Well, let's get into our news headlines because as we come out of lockdown and with case numbers at historical highs in Victoria, there's another layer of complexity that comes with that. And we spoke to Paul Guerra, the Chief Executive Officer of the Victorian Chamber of Commerce a couple of months ago on this show, and he said that compliance was going to be a big topic amongst the business community. Roy, since last we spoke, what are some of the regulations that have come in for businesses?
Yeah, well, there has to be at least a dose by the 22nd of October. I think we've got a slide to show that. And then the second dose by the 26th of November. And these are the rules as they stand right now. I was talking to Becky this morning, and there is a belief that there was going to be more announcements by the end of this week, so it could be interesting. Now, these rules only relate to relevant workers or essential workers as defined in the Health Officers Act, Chief Health Officers Act, direction, sorry. So important that you actually check out that it doesn't apply to everybody. As an example, hairdressers right at the moment are not part of that essential worker list. So there are hairdressing companies right now got their staff going back on Thursday and wondering whether they need to tell their staff to be double vaxxed. And as a rule stands, they don't have to at the moment.
I think that's interesting. There's always going to be, some nuances while the laws are integrated. And as you say, there could potentially be change from here on in. What would you say to businesses who are sort of wrestling with the complexity? Is there an overarching message?
I think health and safety of the workforce is crucial. So if the hairdresser had the choice, do I ask my staff to be vaxxed or not vaxxed? You would go with vaxxed because it's in their interest, it's in your client's interest. I noticed that of the top 4 accounting firms in Australia, all 4 of them have said compulsory vaccinations for all their staff.
I think that there's 2 points that I'd make on that, Roy. I agree with your first point around health and safety, and I would say that the legal system is probably lagging slightly behind the community expectations. I think there is an expectation for people to get vaccinated broadly, and I think that the law will soon be able to catch up to that, and there's obviously some complexity around that. But I think also there's a commercial argument as well. If you're a tradie or if you're working in the building and construction industry, you can get ahead by being vaccinated because people want vaccinated people to come into their house. People want vaccinated people to come into their offices. So I actually think you'll start to see this as a selling point commercially within businesses. What would you say to that, Roy?
I think that's quite likely, and yeah, I think it's likely to happen. I think the difficulty is that there's a lot of people out there still that believe in pro-choice. Now, pro-choice isn't anti-vaxxer, and I sort of understand pro-choice. I just wish they would choose to get vaccinated. And there is another vaccine that's being released in November that many people I've spoken to who are pro-choice and haven't trusted the first 2 vaccines available are saying this one might be better and they're more likely to get this vaccination when it's released.
Every time on this show, Roy, we talk about consumer confidence and the changes and the fluctuations on that index, and we see probably as no surprise that the October number is down. It fell 1.5% month on month in October 2021. And I suppose that, as I said, that this was probably inevitable considering the state of play around Australia.
It's interesting, isn't it? It's still positive, as in 104.6. So we're still in the positive region, and this was taken a couple of weeks ago and does not include Victoria's announcement to be out of lockdown. So I'm impressed that we're still in positive terms.
I think that what we've seen in previous months, as you say, Roy, is that number can very quickly fluctuate based on things like the announcement of the roadmap and positive announcements in that space. So I think that with the strong vaccination rate continuing and Victorians and Australians exiting lockdown and border restrictions dropping, that, as you say, that number could skyrocket pretty quickly, and particularly with Christmas as well and all the Black Friday sales. People suddenly who have that elevated net household savings as well could start to think, I might go and make that purchase and see a more positive outlook.
And also Queensland opening their borders to tourism, and there are going to be flights in and out of Australia more often. So there's a few things that might tick that confidence marker up a bit.
I think traditionally the indicators for businesses and for the stock market probably are further ahead and further advanced than consumers, and more reactive to proactive trends. And I think that this business confidence measure is a great example of this. So businesses, in my mind, have already seen the light. They know that this is ending, what feels like an eternity for Victorians, another 4 weeks, but for businesses, that's a blip. In just a month, there could be this massive explosion of growth coming, and I think you can see that with a massive spike in the September number for business confidence.
Yes, we got the Nike tick out of the lockdown last time, and I think we're hoping for that again, and the businesses are expecting that. They're hoping people are cashed up.
Just keep looking at this graph, because it is interesting. If we go back to that graph one more time, the business confidence graph, because what I wanted to talk to you about, Roy, is look at the increase at the start of the year, January, February, March. That is actually a less steep increase than what we've seen now. We've seen this index go from -6 to 13. So you mentioned the Nike tick. This is very steep, improvement in this number. So I think that we could start to see things like historical highs of the business confidence graph in the months to come.
Yeah, it's a valid point, because it was steady growth back 12 months ago, and that's huge growth. So very surprising how big that is.
Let's change our attention and focus on the property market, Roy. We spoke to the president of the Real Estate Institute of Victoria, Leah Kellnan, last time on RJ Sanderson TV, and she talked through a lot of compliance issues that the industry is facing. But you found some great data, and I think this talks to the implementation of those compliance measures, because there's pretty strong numbers across the board.
Isn't this surprising that here we are with COVID lockdown, that we've still got bigger auction release rates, auction settlement rates than what we had 12 months ago? So I'm surprised at the fact that these clearance rates are so high.
So you've got improved clearance rates everywhere across the country, and also improved volume of sales in many parts of Australia. So as I sort of said just before, I think that this talks to the idea of COVID normal. Last year, everything's new. The real estate industry is struggling to adapt. This year, similar sort of conditions, with probably more extensive lockdowns, with the lockdowns in Sydney as well as Melbourne. And the industry has just quickly adapted, learned new ways of doing things, and probably consumers as well have learned new ways of doing things. And it hasn't stopped. It hasn't missed a beat, and you can see strong property growth across the market. Yeah,
and Leah showed us from REV last month that property prices were so strong, and there's huge demand, clearly, because of those numbers. So it'll be interesting. What's going to stop it? That's the question, is what is going to hit the market to slow the property market down a little bit? What's going to happen?
It's an interesting question, and I think that, particularly and we're going to touch on inflation and interest rates, that potentially could be one roadblock. But as we've heard before, Roy, the RBA, no intention to raise interest rates anytime soon, and maybe if they keep true to that word, could be just blossoming growth in the real estate market for a long time to come. One sector of the property industry that has been hit hard is the commercial property market, and landlords in particular have been hit hard. There is some assistance available for that sector though, Roy.
Yeah, we can see here that the grants are between 6,000 and 6,000 and 10,000, and these hardship grants are very important for people who have commercial property. But what the message here is if you have a business or you know a business person that's renting and they're struggling, you should hit your landlord up for some rent relief, because your landlord has the ability to go and get a hardship fund grant, as we see right here.
Yes, I think that's certainly the message, and as you say, just having that open dialogue is just so important in so many aspects. Roy, we're going to talk about some other measures for businesses, particularly the construction industry in a moment, but I did want to talk about inflation expectations. So we saw that the inflation rate in Australia did increase. This is the number that inflation is expected to be, that was released in October. And you can see that it's a slight decrease for the number that was released in October, a rate of 3.6%, down from 4.4% in September. What do you make of this one?
I think this is a sleeper. I think the inflation rate is the concern that we all have. And I think there's so many factors. We're talking about house price increases, demands. We know the stock market's going up. There must be more money in the community. And I think the inflation factor is going to be a very important one over the next 6 months or so.
Roy, we talk a lot about the construction industry and the I suppose measures in place for tradies and for bigger businesses as well. There are some particular measures in place to help the construction industry at the moment. What are some of those?
Well, there's been a grant that's announced. It's called the Round 4 Construction Grant. It is specific to construction industries, and there's a whole list of ANZIC codes that it relates to. So it ranges between $2,000 and $8,400. It's specific for those that had to close down between the 21st of September and the 4th of October. But you're not eligible if you got the recent hardship fund, which was $20,000, or got the business cost assistant Round 2 grant in July 2021. So check your records for those grants, and if you didn't get those and you are GST registered, then you're eligible for this grant. And
of course, best way to handle that, if you need some assistance, rjsanderson.com.au.
Yeah, come to our website, contact RJS. Or an accounting firm that's across the grants. We've been making many applications, but I will point out that particular grant, the construction grant, was announced about 2 weeks ago, but the application form on the state government website is not yet available.
Geez, there you go. There's this lag effect across the board, and we see that governments are really struggling to keep up with the moving cycle of COVID, the very fast-moving cycle of COVID. But make sure you jump on and ask Roy and the team a question. And speaking of questions, this is the time where we do exactly that, Roy. It's question time. And the first question that we've got that's come in from the viewers is, Roy, if I move from one home to a new home, how long do I have to sell the old family home before I must pay capital gains tax?
Yes. So the answer to that is you have a 6-month window. Now, this question did come out throughout the week, and this particular taxpayer said that he put his house on the market, but because of COVID and no inspections, that it hasn't sold, and he's got a real problem, and he's worried he's going to go over the 6 months. There's nothing in the legislation that allows an extension past the 6 months, but we believe that with COVID there may be an announcement about Commissioner's discretion. But the answer is 6 months.
Well, following that question, a follow-up question to that, can I have 2 homes and get the exemption for capital gains tax?
You're only allowed to have the capital gains tax exemption for one of the homes. It doesn't have to be the one you live in, but it must be one that you declare or deem to be your principal place of residence. So the answer to the question is no, with the exception of that 6-month window that we just spoke about.
Interesting. Well, we're going to talk finance with John Emile very shortly, but before we get to that, it's one of my favourite times on the program, Roy, and it's time to get into Roy's Rage. Roy, what has been troubling you this month?
Well, what I'm really frustrated about, and I mentioned it, I touched on it a moment ago, there's a construction grant. It's been announced. It's for businesses in the construction industry that was closed compulsorily for between the 21st of September and the 4th of October. Guys, we're way past the 1st of October. The state government have not got the application up and live, and they're telling us you will be able to apply from the 5th of November. That's a month after the lockdown. Then allow for a period of time for them to process the grant, which could be another 3 or 4 weeks based on history of the grants we are applying for. So my rage is state government, get these applications up and ready as they're announced, not 4 weeks later.
Cash flow is a big problem for these businesses at the moment, isn't it, Roy? So, you know, it's so important to get that cash moving quickly.
It staggers me that the state government don't see this as a problem. You know, they're closed for 2 weeks. Cash flow is critical. It's king in most businesses. It's what destroys most businesses. So the state government really needed to get that up and running really quickly. All
right. Well, just take a deep breath, Roy, because we're going to speak to a special guest now. John Emile is from RJS Loan Solutions, and he's here to talk to us about finance. John, thanks so much for joining us on RJ Sanderson TV.
Thank you, David. Thank you, Roy. My pleasure.
John, it's an extraordinary time at the moment with historically low interest rates, and lending institutions everywhere are doing everything to attract finance from consumers. What is the current state of play in that space at the moment?
What we've seen is the major lenders have been very aggressive in trying to increase their mortgage book, and now we're seeing the same state of play coming from non-bank lenders as well. So there's been a real push to acquire a greater share of that home loan market.
John, I've noticed there's a slide going up that shows the cashback offers. And they seem to range from $3,000 to $6,000 between a number of lenders. In your career, and you've been in finance all your life, in your career, have you seen this sort of aggressiveness before?
No, actually, no. To be honest, Roy, I think the extent of those cashback offers, initially it started off with the major lenders, and now we've got some non-major lenders, non-bank lenders starting to offer similar cashback offers. But again, I think it's a sign of the desire to increase that mortgage book, and there's been times where especially the big four banks have used different strategy, but nothing compared to those cashback offers we're seeing at the moment.
So it's interesting that if I've got what looks like a $500,000 loan, they'll actually give me $3,000 in the hand if I do a refinance with that shift lenders to that bank. They're not only aggressive in cashbacks, they're also aggressive in rates, because some of the rates that are being on offer and incentives to change lenders, they're not offering to existing lenders, it's to bring in new lenders. I've also noticed they're very competitive at the moment.
Yeah, they are. I mean, we've got rates currently from 1.79%. But what we're seeing, obviously, and I think you touch on that, is I don't know any lender who's proactively rang their customers and offered them a reduced rate. It doesn't happen. So customers really need to be proactive to ascertain how competitive their current product are or interest rate are, and we saw that maybe about for the last 3-4 months, where the fixed rate were really competitive across a number of different lenders. And just recently, over the last few weeks, there's been movement across the variable rate as well, where some of the variable rate are actually reducing. Again, I think it's a sign of trying to attract new customers to their business.
John, we've got a slide on refinancing that we're going to bring up now. Talk us through this case study, because it is quite incredible the amount of money that people can save.
Oh, absolutely, David. And this is the thing. I think it's similar to what people should be doing with their insurances and so on. The opportunity cost of doing nothing is can be significant. So if we take a customer who has a current loan of 750,000 at 2.99%, it's only about 66% in terms of loan to value ratio. And if we were able to refinance that loan, the same loan amount, that represent a $450 increased cash flow every month. But more importantly, it can actually represent up to $164,000 over the life of the loan, and in this scenario specifically, what we've seen is the lender was also willing to offer a $4,000 cashback. Again, that cashback goes straight onto that loan, and the net benefit is even higher. So really, there is an incentive for people to review their home loan. I would recommend at least every 2 years.
It's quite extraordinary. Like when you see the amount of money that that people could potentially be saving, and you touched on an interesting point there as well, John. That it's not just in loans; it's across insurance, electricity, gas. There's so many of these comparison providers at the moment that make it quite easy. Just out of interest, what are the barriers at the moment? You mentioned the opportunity cost of doing nothing. Like, what do you think it is? Are people scared off by the process, or what do you think it is that stops people from going down this track?
Yeah, I think it's similar to other services that people use. I think it's the willingness to put the effort, because obviously you have to do your research, and that's where we come in, because as brokers, we do the research for the client. But nevertheless, for the client, they need to invest the time in order to realize, like in this example, $164,000 in benefits. So I think it's about taking that initiative and getting out of that comfort zone that sometimes we're in.
John, I know because we're so closely aligned that your team is accredited with over 30 plus lenders, and that example is a perfect example of why somebody should engage a finance broker. But interesting, when we do tax returns, we talk to our clients about what their investment loan or their home loan is, and we as a financial expert will point them towards John and his team to say, just get it reviewed. It doesn't cost anything. We don't charge to review it. And if you're not better off, we'll tell you you're on a good deal. You've got a good deal. Stay where you are. But if you're going to be better off, we'll tell you how much you're better off, just like that example. John, we've talked today about how house prices are being driven up and there's cash in the economy. I think these low rates are driving it in some way because more people can afford property. That's got to be a reason. But what's new in the industry that you, as being manager, because you're across finance, there are some things. We've got a slide that summarises it. Maybe just talk us through the highlights from this slide.
Yeah, I guess the most recent changes that happened is the macroprudential policy that was introduced by APRA, which is effective from the start of November. And basically and this has been directed by the Federal Treasurer, but the objective behind that is to try to slow down the credit growth in Australia. And how they intend to do that is by raising the interest buffer. So if I can explain, every lender for every loan has a buffer that they use, and the buffer used to be 2.5%. So if you were applying for a home loan and the rate, let's say, was 2.5%, they would use 2.5% on top of that, and they would then check whether you can service the loan based on 5%. All right. So what APRA is doing is actually increasing that buffer from 2.5 to 3%. And now this, from all calculation, we believe that this is likely to result in about a 5% change in someone borrowing capacity. All right. I personally don't think there will be a significant impact to credit growth through this measure, and for two reasons. First reason is there's also two other strategies or policies that's coming into effect. One of them is from the state government, where the Victorian state government is introducing a new, I guess, home buyer scheme called the Victoria Home Buyer Fund, whereby the state government of Victoria will contribute up to 25% to the purchase of a home, which then means that a client only requires 5%, therefore no lender's mortgage insurance, but bearing in mind that the contribution from the state government is an equity position. So the state government will own 25% of your property. All right. Obviously, there are conditions attached to that in terms of income and location as well. And the third thing is some recent changes across the self-employed income servicing policy across some of the lenders, where for self-employed who pay themselves a wage, either through their company and so on, every month, instead of using the business financial or the business tax return and so on, the lenders now are looking at a simplified method of using pay slips that the self-employed pay themselves. So, and I think the last two measures will in some way counteract the APRA macroprudential policy as well.
Thank you very much for that very comprehensive summary, John, and really appreciate all your time today. Thanks for joining us on RJ Sanderson TV.
Thank you, David. Thank you, Roy.
John Emile there from RJS Loan Solutions, and as he mentioned there, and as we spoke about, Roy, plenty of cashback offers, so great incentive for people to just have a look.
Yeah, I would encourage people to reach out to John or one of the RJS accountants and just get a review done. It costs you nothing to have a review done, and you might be surprised with what the outcomes are.
Roy, 2021, what a year it's been. This is our last episode of RJ Sanderson TV for the year. I mean, we've been in about 3 or 4 different lockdowns here in Melbourne. We've seen the consumer confidence index go up and then down again. And, we're probably at a point where we feel like, COVID, we've progressed through there. But I think we felt like that we were at that point at the start of this year as well. Maybe firstly, before I get your predictions for next year, what are your reflections on this year?
I think it's been a little bit of a roller coaster ride. Just consumer confidence. We've continued to have property increases. When we started this show some time ago, we were expecting there to be a cliff. We were going to stop JobKeeper. Remember the belief that property prices were going to tumble, and people were sitting on the fence saying, I'm not buying a property until JobKeeper finishes because there's going to be so much property available. And it hasn't happened. The share markets continued to be buoyant, and the interest rates remained low despite thinking that they should go up. And the money that the government have been putting into business and to individuals in the form of hardship payments or emergency payments or JobKeeper has increased the financial wealth of some clients, and on average, certainly increased. So it's been extraordinary. It's not what I would have expected, but it's been very interesting. It's been great to share it with our viewers and listeners across looking at all this sort of stuff from a different angle that you don't see on mainstream media. So we're just happy to bring these sort of stats to you that aren't as well known.
You make such a good point there, Roy. Reflecting on the year, if I gave you the headlines that said, we'd have 4 lockdowns across the 2 biggest cities in Australia, but then I coupled that with saying, hey, we'll still have historically low interest rates, the lowest unemployment rate in years, no real inflation. We've had, small sections of inflation at times. Property prices, no effect. In fact, they've increased. Auction clearance rate, higher. Volume increase in the real estate space. No recession in 2021. We had a recession in 2020, but no recession in 2021. It's quite extraordinary, isn't it? The social narrative doesn't marry up to the economic narrative at all.
I would have said you're dreaming.
Yeah.
It's not possible. It's amazing what has been achieved and surprising what's been achieved. And I don't know who we give all the credit to, and I don't never get political on this show, as you would all know, but Josh Frydenberg has probably done something right, I suspect.
Yeah, it's hard to argue that, and I think that as I probably left out a few indicators there. Household net savings at record highs. As coupled with low unemployment, as we said, and record job advertisements. So I don't know. There are more academic minds than you and I that will be continuing to ponder these questions and to create hypotheses moving forward. But that's exactly what we're going to do as well right now, Roy. It's October. We're hoping to reconvene again in March. Where do you think we'll find ourselves in March next year, socially, economically, and just generally?
Well, generally first, Carlton's expecting to make the 8. I'll start with that.
You could have given that prediction in the last 20 years, right?
I have been giving that same prediction. I'll get it right one time. I think right now, as we sit here today, there's a labour shortage at many industries, which is, in my opinion, only because there's a payment of $750 per week being paid tax-free to many people who have reduced hours. As our vaccination rates increase, that is about to stop. And I think that people will come back into the workforce and there won't be a shortage of workforce. In actual fact, I think unemployment statistics will show an increase because I'm not 100% sure that today's or the last 12 months unemployment rates are truly reflective of the unemployment rate. So I'm expecting unemployment rate to go up. I'm expecting inflation because all the factors we've talked about, with more money in the economy, I think inflation is a certainty. So I would be watching those stats. So when we reconvene in March next year, we will have had a 5-month to 6-month break and we will see whether inflation and unemployment have increased. And my bet is that they will have.
It's an interesting question, Roy. I think that, I agree with your thoughts on inflation. I feel like that's coming. I feel like an economic boom is coming as well. I think that net household savings increase and the economy reopening, we'll just see an explosion of activity, and particularly as the international supply chain also starts to bolster itself and more cogs start turning in that space. I think we just could have a complete explosion of activity over December, January, February. International travel hopefully up and running again, as well as state travel, and a big Christmas period kicking off with Black Friday in a few weeks' time. I think we could have a pretty extraordinary period coming up. Roy, it's been an absolute delight and a privilege, and we all here at SEN thank you for the opportunity to produce this one, and we thank you for your participation in RJ Sanderson TV in 2021.
Thanks, Dave. It's been fantastic. I know this is unique, it's different. There's no other accounting firm doing it, and it was an SEN initiative, so we appreciate that you guys contacted us and said we think we've got something for you, and we've enjoyed it. I get input from many of my team. Some of the slides come from my team who participate. And in business, for those of you who are listening who are in business, people say the number one most important thing in business is your customers. That's not correct. It's your staff. You look after your staff and they will look after your customers.
Hear, hear. I agree with that, Roy. Thanks so much for everyone's company on RJ Sanderson TV throughout 2021. We look forward to seeing you again in the new year.